After last week, I'm very discouraged. We've been hearing about the fourth turning for 20, 25 years now. And we've all kind of known that like sort of around 2025, we were going to enter this period where, 2025, 2032 is going to be really hairy. I think we're there.
Luke Gromen, founder of FFTT. It's so great to see you. Thanks for joining me, and happy Fed Week.
Happy Fed Week. It's great to be here. Thanks for having me back on, Natalie.
Well, since you're such a star at really forecasting what's happening on the macro side, can you just share what is your outlook? What do you expect to happen this week, and how will the markets react?
I think they'll probably cut 25 basis points. If I had to guess, the markets won't like it. If that's what happens, the markets won't like that. But I don't think that sell-off would last for very long. I just think there's bigger forces at play ultimately. But that's, that gun to my head, that would be my guess. But how strongly do I feel about that? It's very loosely held.
What do you make of the fact that we have stocks at these all-time highs, but the economic data is worsening? We have unemployment ticking up. The FHA is doing these revisions and essentially trying to prevent as many delinquencies as possible. Consumer sentiment. I mean, I don't. For people that are wondering, how can stocks be at an all-time high when Main Street's really struggling? What do you say?
I would say go look at Argentina. Go look at Venezuela. Go look at Weimar Germany. Stocks were awesome in Weimar Germany as they were literally, assassinating moderates in the streets, and they were, having political discord, and their industrial base had been hollowed out by war and by war reparation. And so I think my read of what we're watching in stocks is, unfortunately, I think the markets have begun playing by a new set of rules, which is, we have seen 5 or 6 different times in the last 5 years that nothing will be allowed to hurt the Treasury market. Treasury market starts to dysfunction, more liquidity comes like that, either by a weaker dollar from the Treasury or action from the Fed. And I think they're doing the math around true interest expense, which is like, okay, we need to cut something, right? Doge, the failure of Doge, I think, is not given enough contextual importance, which is something that we've talked about before now, something I was harping on over and over earlier this year, which is, look, here's what the U.S. government spends its money on. It's spending 80% of all-time high receipts on entitlements to boomers and silent generation. 70%. It's spending 25% gross interest. It's spending 20%, 15%. $1 trillion on 20% on defense. What are you going to cut? You can't cut entitlements. And, if you think you can cut entitlements, like, I would encourage people to look at the tragedy last week and revisit your view. And I think that's, from an economic standpoint, maybe the biggest takeaway of last week, which is, if you thought there was a tail chance that entitlements could be restructured in any reasonable time horizon, last week marked it to zero. So there is no chance entitlements are going to get marked down. Defense is only going up.
Yep.
All there is to cut rates. So I think markets are beginning to play by this new set of rules, which is, bad news is good news. Good news is good news on a nominal base. Like, I've got, I think you look at a chart of the S&P 500 over TLT. You look at a chart, which is the long bond ETF. You look at a chart of gold over ETLT. You look at a chart of Bitcoin over TLT. Like, it's all the same. It's all the same chart with, gold has the least volatility. S&P has the second least volatility, and Bitcoin has the most volatility, as you'd expect. But they are all up and to the right. They're hockey sticks. And I think we're just seeing more and more investors, and, the market's playing by the new rule, which is, I just can't own bonds. Like, I can't, not only can I not own bonds, but they're going to run this thing so hot because they don't have a choice. The Fed is not being preempted because, Trump's an idiot. It's being preempted because they came in, it's like, well, we're going to cut. And then they looked and they did the math, like, oh God, what did I get myself into? All we can cut's rates. So, some of those things I say, I don't say lightly, but I do think that what we're seeing in markets is the discounting of that we're past a tipping point of this sort of just get me into something that's going to hold purchasing power when they do what they have to do.
Coin Stories is proudly brought to you by Gemini. Investing in Bitcoin has never been easier with Gemini's Bitcoin credit card. Earn up to 4% back in Bitcoin on everyday purchases like gas, dining, groceries, and more, with no annual fee, no foreign transaction fees, and no exchange fees on your rewards. And this summer, get 10% back in Bitcoin at golf courses. Plus, sign up today and get a $200 Bitcoin bonus when you spend $3,000 in your first 90 days. Apply now at gemini.com/Natalie. If you're like me and want to stay on top of Bitcoin without getting lost in all the noise, you've got to check out the weekly CIO memo from Bitwise Asset Management. Bitwise has been around since 2017 and manages more than $10 billion across 30 plus strategies. CIO Matt Hogan puts together a quick 5-minute memo that breaks down the biggest stories in digital assets each week. Just go to bitwiseinvestments.com/CIO memo and check it out. And always, of course, carefully consider the extreme risks associated with crypto. Coin Stories is also brought to you by Bitdeer, a global leader in disruptive technology for Bitcoin mining and high-performance computing for AI. Bitdeer trades under the stock ticker BTDR and boasts more than 2.5 gigawatts of electrical capacity across 4 continents, positioning Bitdeer as one of the most diversified and power-dense computing companies in the world. Learn more at bitdeer.com. You've spoken a lot about fiscal dominance, where essentially monetary policy becomes subordinate to government spending. But I get a lot of questions about this from viewers that maybe don't have an expertise in macro, and they're wondering, how does government spending end up with stocks at an all-time high? How does the money funnel into essentially these assets? Because I think the first impression that people would have is that, oh, if the government is spending a lot, they're spending it on their employees or maybe infrastructure, government programs. How is it ending up in stocks?
Yeah, I think it's ultimately, dollars are fungible, right? Once you emit it into the economy, you can't control what happens to it. We saw that with the stimmies during COVID, right? It was like, okay, well, toilet paper or TVs or whatever people were buying with that stuff. And so ultimately that means deficits are inflationary over time. Now, I would argue that historically, part of the strategy of the U.S. government has been to sterilize those deficits by giving tax breaks that steered the money into financial assets as opposed to real economy, right? So for, I've been in the workforce for whatever, 30 years. I've always gotten a tax break if I can put up to 15% of my salary into 401k, right? And so that's what I've done and a lot of other people have done. Same thing for a number of different professions. And that works because all else equal, I would have made 15% more each of those years. And the government would have taken their rake, but I would have spent more into the real economy. I would have bought real goods. Inflation reported would have been a bit higher than it was. And that would have hurt the bond market. And everything has been done to, help the bond market, defend the bond market, support the bond market over the last 40 years. And that strategy actually in the short run, like so much we do as a country, makes sense in the short run, even in the intermediate run. The problem with it is that in the long run, it leaves equity prices, if you keep running deficits, you keep inflating equity prices. And if you don't include asset price inflation in your calculations of inflation to adjust the economy accordingly, which of course they didn't, you end up with a situation where equities become the key marginal driver to consumer spending and the key marginal driver to U.S. government receipts. And so now the government becomes critically dependent on stocks going up just to keep the wheels on the cart for their debt. And, if you do some other things from a tax perspective, which they've done to accelerate that, if you do some really stupid things fiscally that have literally negative economic value added, like $8 trillion on war in the Middle East and certain other things, bailouts for fraud, those are negative value add. So negative economic productivity. So where I'm going with this is that I don't know that it's greatly appreciated. There's sort of a stock and a flow, right? There's a stock and a flow issue to what I've just described. The stock issue is that we're running $2 trillion deficits a year structurally. And that money is, where's it going? Well, I just said 70% of it's a cash payment to either boomers and silent generation or their care providers, who are then turning around and spending it into the economy. Because remember, what percent of the U.S. economy lives hand to mouth, right? Is it 60%? Is it 70%? So any money you give any of those people is going to be spent instantly, right? So there's a velocity of money. So that's the sort of the flow issue. The stock issue to this strategy, I don't think is appreciated still what's happened. And I think it ties back to your point of why, what I was talking about before, of just why I think S&P markets, why is the market at all-time highs, is S&P, TLT, S&P over TLT stock, Bitcoin over TLT, gold over TLT, is that now the boomers and the silent generation, to a lesser extent, have all this money. They've got 70 trillion, 80 trillion in assets. And there's a hard stop at death, right? You can't take it with you. So all of a sudden, all these asset markets, which for the boomers' entire lives were essentially a sterilization of inflation that would have been higher, driving rates higher, making the U.S. government's fiscal situation more intense. It would have been a free market. All of that sterilized inflation in paper assets is now coming into the real world. You go to a restaurant, take a look around you. Who's there? Boomers. Go to a resort, take a look around you. Who's there? Boomers. Go on a nice vacation. Who's boomers? Why? It's like when
They're the
you ask
ones
Willie
buying
Sutton,
homes.
they've got the money. Guess who's buying the homes, right? How can mortgage rates have gone from 2.5 to 7.5, and home prices haven't taken up, like they haven't missed a beat. Home prices are at all-time highs. Why? Talk to a real estate agent. Well, boomer giving their kid cash to pay a house. So I think that dynamic is sort of part and parcel, or sort of, part 1A to what I described before, which is the markets are realizing that there's no getting out of this, right? They're going to have to print the money because that's where they've gotten themselves. And I think within all of that, there's this secondary effect of like there's a hard stop at death. Spend it while you got it. And who's, and the challenge in all this is like, well, we just need to hit stocks to slow inflation. Yeah, that would work if stocks weren't the key marginal driver to not just consumer spending, but to GDP and to tax receipts. And even then, that would be okay if the U.S. hadn't blown all this money on negative productivity stuff to run debt up to 37 trillion. We are not earning a positive return from the 8 trillion we spent in Iraq and Afghanistan. We are not earning a positive return from the bailouts of Wall Street. We're not really, earning a positive return. I hate to say this, from the entitlements we're paying to. That's the stage of life they are. That's not discriminatory. That's just an economic fact. You are productivity, and then once you get to a certain age, you donate to the system, and then you take from the system. That's just how it works. So we're spending all this money. If you wanted to tank stocks to slow inflation, all you're going to end up doing is blowing up the Treasury market, because stocks back the Treasury market. And, then we go right back to sort of, rule number one: nothing's allowed to hit the Treasury market. And I think that's why stocks just go up every day. I think that's why we're seeing what we're seeing, which is, I think, and forget about I know, based on conversation I'm having with very serious people, this is a conversation happening at the highest levels of finance. Like, they can't do anything about it. They have to do this. And I think that's what we're seeing in asset prices.
Aren't these characteristics of the fourth turning, and why we're seeing especially young people turning to certain types of, let's say, politicians and candidates that are promising to help them, especially with their economic resentment? Candidates like we have in New York City with Zoran, the populism essentially rising. I saw you tweet recently about the fourth turning.
Yeah, I think it's fourth turning, which is very well known. I think Peter Turchin, Turchin, his book End Times, I think doesn't get nearly the credit it should. I would argue it's actually better than the fourth turning about describing what we're witnessing. And the construct of his book is that during periods of time in history, going back millennia, when you have two factors, significant wealth inequality and what he calls elite overproduction, right? You know, we've got we got too many people graduating from college, not enough people, you know, welding, not enough engineers, you know, stuff we've talked about a lot. What you end up with is political instability. And then it just becomes a question of, are you wise enough? Do you have wise enough leaders to take some of the medicine you need to do to reduce that wealth inequality and to sort of restructure the economy? Because if you don't, then elite, you know, then elite overproduction tends to work itself out on its own in very unpleasant manners. And in the book, he says, look, the current, this, I think he published a book in 23. He said in 23, the level of U.S. wealth inequality and elite overproduction combined is the highest level since the 1850s in the U.S. We all know what happened in the U.S. in the 1860s. And it wasn't pleasant. So, yeah, I think everything we're watching, unfortunately, a lot of it is symptoms of it, you know. At some point you go, okay, well, it's not a one-off anymore. I think there's gonna be a lot more Mamdanis. Yeah. Absolutely. I think there are. And I think they're going to be centered in, you know, in other blue cities versus in red cities, at least to start. Because you're just not seeing the wisdom from leadership. And I say this out of, you know, both sides of the aisle. Mm-hmm. And it's not just a wisdom issue. It's a political issue. In other words, we don't have a political system that allows us to do anything that lasts longer than, you know, 2 years at most, right? They're already talking about 2026 elections, which are 14 months away. So, yeah, I'm after last week, I'm very discouraged. I really thought maybe things could get pulled out, but after last week, I'm really starting to be pretty discouraged.
Me too. I've had a really difficult time processing what happened. It's giving me hope that a lot of people are coming together, but also destroying my hope that so many people have celebrated in something so horrific. And just to see how divided we really have become is, it's really, really discouraging. But a lot of the frustration, I feel like, even though we have our social differences, a lot of it is rooted in these economic issues and people feeling very, very frustrated, left out. And what I've taken away from your work, especially in recent months, is just how unsustainable this post-1971 monetary system really was from the start. It was never built to last. And so now we see it unwinding. And you wrote recently, the rules-based global order is already dead. It just has not been marked to market yet in asset prices. Can you talk a little bit about that, maybe for people that are coming in and a little bit newer, trying to understand this monetary reset that's underway? What is that rule-based order, and how has it been coming apart?
So, you know, the rules-based global order, I would say from an economic standpoint, has been sort of this, you know, we send our factories and jobs abroad. Foreigners make stuff for us. They send us the stuff. We send them the dollars to pay them. And then, you know, they reinvest the dollars into our financial markets. And it's been very good for China. It's been very good for Washington. It's been very good for Wall Street, right? As Washington gets cheap deficits, Wall Street gets to touch the money first, candle effect. And, you know, in the short run, it's great for America too, because when you go from 30% debt to GDP in 1980 to, you know, 125% today, you know, I would say we're on the wrong side of the marginal utility curve and probably have been for 10 years. But at least until you got to the peak and started rolling over the marginal utility curve of more and more debt, we had a great debt-fueled consumer party, right? Like, mm-hmm. Hey, how awesome. And who doesn't like a party? I certainly do. So that is sort of the rules-based global order. And you know, an addendum to that has been highlighted by many people, correctly so. It's an oversimplification, but I think it's a truth. Is if you as a foreigner try to do something to change the rules-based global order, the U.S. military shows up and kicks your head in. And I think that's sort of you know, a 15-second version of geopolitics since roughly the year 2000. And that's fine. Like that's, you know, that's realpolitik. That's realism. That's history. That's humanity. Okay.
And we once had the leverage to do that.
The challenge that I think is one of these big variant perceptions and one of the new rules that the market is playing by that most U.S. investors simply are not is we went too far, as we always do, right? It's, parties are good. Going too far with parties, you end up with, mom and dad's Porsche upside down in some neighbor's living room, right? The issue is that the U.S. military on the margins is now made in China. And so we have hollowed out so much of our defense industrial base, particularly around certain key components, rare earths, et cetera, that we literally cannot go to war. So now the last people to understand that ultimately the U.S. military backs the dollar, which backs the rules-based global order, as it were. The last people to understand that the U.S. military can't do that to China, to Russia, ironically, are Wall Street. They're still stuck in this, we'll just go beat up the Russians. We just haven't tried hard enough in Russia. We haven't tried hard enough in Ukraine. If we actually tried, dude, read the report. In 11 days of medium intensity combat, we chewed through 15% of our air defense, THAAD air defense missiles. We literally couldn't go a month against the Russians or against the Chinese. And the military knows this, by the way. And that, again, this is, for me, I'm not being anti-American. I'm not being unpatriotic. I'm telling people as it is. Mm-hmm. Some people take it that way. That's fine, whatever. But my point for the economic side of it is, if the dollar was backed by the military and the dollar backed the rules-based global order, and we know, obviously, the Chinese and Russians are trying to make changes to the rules-based global order, and the military absolutely cannot kick in the Russians and the Chinese head because they don't have the supply chain to do it, and they won't have the supply chain, engineers, welders to do it for 10 years best case. 10 years best case. Then you come to a very, very powerful conclusion that you highlighted, which is the rules-based global order is dead. It just hasn't been marked to market yet. The West doesn't understand. We can't go to war to stop what's happening here. And what's happening here is, ironically, the communists have instituted, the communists and the Russians have instituted a capitalist new rules system, which is, we're going to trade in our own currency and we're going to net settle it at the central bank level in gold. And that gold's going to float in everybody's currency level. That is way more capitalist than the dollar-based system of the last 40 years, ironically, very ironically. But that's where we are. And, I think it's why stocks seemingly just go up on whatever news it is. I think it's why gold goes up seemingly over the last several months on every day ending in Y. When markets are open, gold goes up. And I think there's a quorum of investors around the world that are realizing this. Look, this is either going to go nuclear, or we're going to get a restructuring of the rules-based global order. And as you know, that's why I think what Trump said 2 weeks ago was so powerful after this SCO meeting, which was, to me, read I thought 2 weeks ago was the most important geopolitical week in since 1989. I think it was that big. The combination of the SCO meeting, the Chinese parade, the new gas line between China and Russia, and then Trump admitting that India is going with China and Russia, saying they're plotting against us, but then wishing them well. I think that was, and then the U.S. military, by the way, saying we're going to pivot from China to the homeland. So that's what I mean when I say it hasn't been marked to market yet. I think we are 3 pitches in the first inning to Wall Street understanding what just happened here over the last 2-3 months.
Well, let's pull on some of those threads, because it seems to be a growing consensus that there is a monetary reset underway. But is the monetary reset that the BRICS is trying to achieve the same as the one the US is trying to achieve through things like Genius Act, stablecoins? Are there two simultaneously underway that are battling each other? Or actually, are we just moving toward a neutral reserve asset, gold, maybe in the future Bitcoin, and this will all actually work out in the US's favor in some ways?
I think there's a battle for the moment. I agree with that sentiment. I think ultimately the Genius Act is an attempt to find repressible balance sheet, right? If they can get stable coins big enough, that lets them do a couple things. Number one, it conceivably, depending on how they manage it. Look, if Bessing comes out and says, Eurodollar markets are no longer eligible for swap lines, but everything in these stable coins are. That could conceivably create a flow of capital out of Europe and around the world into these dollar stable coins, which will be backed by T-bills. Okay. We'll see how much money flows out. I could see some would, but as with so much that we do, it's a very short-term solution because ultimately it turns around and creates a crisis in Europe like tomorrow. And when Europe has a crisis like tomorrow, guess what they're going to sell? The dollar assets they've been buying under the old rules-based global order for the last 40 years, which now total $62 trillion, by the way. $27 trillion net, $27 trillion net, $62 trillion gross. So like, it would be an attempt to basically, okay, we're drowning. We need to keep our heads above water. Quick, grab Europe, shove them underwater and stand on them. And, we can take a few more breaths of air. It's not nice, but like, that's where we are in this movie because we've played our hand not very well for the last 30 years. The other thing it gives Besant the flexibility to do conceivably at some point is if he's able to suck a bunch of money in here into stable coins, and it doesn't immediately turn around and blow up his asset markets, which it probably would, but let's just, for sake of argument, it would conceivably allow him to then disintermediate the Fed altogether, which is to say, all this money came in overseas and wants the backing of dollar, because we're not going to back the euro dollar system anymore with swap lines. But the payment for that is that we're issuing in the T-bills that are in 2.5, 3 trillion in stable coins, which is his number, not mine, over the next 4 years. We're gonna make them non-marketable T-bills, and the yield on them isn't going to be 4. It's going to be 30 basis points. And he would have restructured the debt. He would have, and again, that's probably highly inflationary. What I can't weigh in my head is like, I can see how capital here into T-bill stable coins will be good for the dollar, bad for the euro. But then if we turn around and are going to run $2 and $3 trillion deficits at 30 basis points where he has completely disintermediated the Fed, I'm not sure that's good for the dollar. But I'm trying not to grow a brain about it. I'm just like, okay, well, one way or another, it's good for Bitcoin. One way or another, it's good for gold. That part to me seems pretty clear. So ultimately, when I look at what he's trying to do, where and that's why I bring up Bitcoin, I don't see how what he's trying to do doesn't end up being good for Bitcoin. I think ultimately he needs, a much higher price of Bitcoin to sort of drag stablecoin market cap higher anyway. And in this sort of dynamic, look, if he sucks that much liquidity into stable coins, and then we start using these stable coins, right? JP Morgan starts issuing stable coins. One part of the Genius Act that it's been made apparent to me that is not that well understood is that bank reserves can be used to back stable coins as well. Well, part of the reason why QE wasn't like wildly inflationary is because essentially banks were bribed with interest on reserves to not lend those reserves out.
Right.
What I'm describing and what the Genius Act provides for by having reserves being able to back stablecoins, if they start being used as money, that's like the banks taking the money out and just injecting it into the economy. That's wildly inflationary. Is that good for the dollar, bad for the dollar? If they pull the money over here, I don't know how that nets out, but I know one thing. It's really good for Bitcoin. I know it's really good for gold. And so again, I'm trying not to grow a brain about it. Just buy gold and Bitcoin and they can figure that out. So I do think they're trying to maybe stand up through the stable coin. I think there's, two dynamics. I think there is dynamic one, which is, oh my gosh, we need repressible balance sheet like yesterday. And then I think dynamic two is ultimately, if we're in this great power competition, and part of that competition is what's the new and future global reserve asset. Then I think, you can. It's partly can be what he's doing with stablecoins can partly be seen as trying to stand up Bitcoin as a competing reserve asset, which, by the way, has competed very well against gold over life to date. Last 4 years, okay, but life to date really well. So let's see. But I do think there's this competition between Bitcoin and gold as the next global primary reserve asset that is starting.
Well, and I'm sure you saw that Russian minister that essentially commented on this, saying that the US is taking on, like, it's like a scheme that we have, that we want the crypto market and maybe Bitcoin to help us reduce our debt. And so it seems like the BRICS nations are actually catching on and thinking that this is our strategy.
Well, I think that's exactly the strategy, and I think he's right. Um, Look, I think it's a kind of a naive statement on his part. Like, Putin was talking about how we were going to eventually have to devalue our debt in 2016, right?
Mm-hmm.
I've got the receipts. You can see it on his commentary. So they've known this was how it was going to go, and that's before the last 9 years of nonsense that has transpired in terms of our debt with COVID and all this stuff. And so, um, I think they've known that. And I look at things like the CEO of Tether, right? Paulo Ardoino said last week, like, we're buying gold, Bitcoin, and land because of the hedges against coming dark times. Like,
Yeah.
the math tells you this, like, this is how it's going to go. Like, the only mystery is like when, and then sort of tactically, right? It's like, well, how actually are they going to do it? What are the events that are actually going to trigger it? I think that's what they're going to try. And by the way, I think it's really good for the world. It's really good for the U.S. It's not really good if you own a lot of bonds, but like, that's been in the cake. So, if we want to restructure, reshore, rebalance, if we want to separate from China strategically, like, that can't happen unless something devalues Treasury bonds relative to gold and Bitcoin to like zero.
Coin Stories is brought to you by Speed Wallet. Want to win 1 million sats just by answering simple Bitcoin trivia? The top 50 players win free sats every week, and one lucky winner gets 1 million sats at the end of the month. Speed Wallet makes Bitcoin simple. It is the fastest growing and most loved Lightning wallet that allows you to send and receive instantly, swap to stablecoins, shop gift cards, play games to earn, and explore mini apps. Speed is also driving real adoption. Stake and Shake now accepts Bitcoin nationwide via Speed payments. Head to Speed.app/coinstories and use code CoinStories10 for 5,000 free sats. Next up, Bitkey, a Bitcoin hardware wallet with multi-sig security, inheritance, and a recovery system designed for real life. No complex setup, no seed phrase, just true self-custody without the stress. Named one of Time's best inventions in 2024. Use code STORIES for 20% off at bitkey.world. Up next, the Bitcoin way. There's only one way to protect your Bitcoin from government, politicians, and third-party risk, and that is 100% self-custody. My friends at the Bitcoin way will train you how to do this the right way the first time. No compromises. Go to thebitcoinway.com/Natalie to speak with the experts about making sure your Bitcoin is secure and private. Coin Stories is also brought to you by Genius Group, a Bitcoin treasury company listed on the NYSE American under ticker GNS. Genius is building toward a 10,000 Bitcoin treasury and just launched the Genius Academy, featuring courses from Saifedean Ammous, myself, and more. Start learning for free today at geniusacademy.ai. Genius Group. Genius isn't measured in IQ, it's measured in Bitcoin. I want to get more of your thoughts on Trump essentially in the last few weeks, sort of standing down as the BRICS leaders come together. You mentioned the SEO, the Chinese parade, where we saw all of these crazy weapons. And you wrote that essentially it's sending a message that if we try to mess with the reordering, the restructuring, moving to a neutral reserve asset where gold floats in different currencies, we basically risk nuclear war. Can you talk a little bit about that and really what's at stake and how you're sort of saying that Trump is actually choosing peace?
Yeah, I think he is. And forget about what I think. I think the National Defense Strategy report that came out 3 days after I wrote that said basically exactly that, which is we are pivoting from China and we are going to focus on the homeland and our own hemisphere. And then 2 days after that, Pete Hegseth met with his counterpart from China and said, "Listen, we are not interested in a conflict with you guys." So, yeah, I think I don't have the engineering training to look at the weapons that China displayed. And know what I was looking at and whether that scares people or not. I know that mutually assured destruction was a very effective tactic between the U.S. and the USSR for 40 years. I've been told by multiple different people who don't know each other, that what the Oreshnik missile that Russia demonstrated in Ukraine in November of last year, we don't have an answer for. And if we don't have an answer for it, that changes everything, right? That changes 400 years of Mahan Doctrine. Mahan Doctrine said if you control naval checkpoints, you control the world. And that's what our and the Brits strategy has been, and why we have this blue water navy. Well, if we don't have an answer for the Oreshnik, and you sail a carrier battle group to cut off Taiwan, the carrier is going to lose. And then you're in World War III, because America is not going to stand aside and let a carrier get evaporated. So, and when I look at ultimately the game theory of it all, particularly vis-a-vis what has transpired over the past 2-3 years in Ukraine and Russia, I think there is a realist wing of the Trump administration that seems, fingers crossed, seems to have control of the controls, and is saying, look, we don't have the industrial base to fight a conventional war. We don't. And if that's the case, then we need to retrench. We need to sort of retrench with honor. We need to back off and refocus here. God knows we got enough to work on. I mean, it's not like we spent all this money in the Middle East and have an awesome infrastructure while we spent all the money there. No, we pissed the money away there. Our infrastructure here is suboptimal, to be kind. So I think that's exactly essentially what has just happened. And again, this has happened in the last 10 days, 12 days. It's so powerful. I think, they're effectively choosing peace. They're effectively choosing, hey, let's rebuild. Let's run this thing hot. Let's reshore. Let's reinvest. If 1940 to 1980 were what's good for GM is good for America, and 1980 to 2020 was what's good for Goldman Sachs and the Treasury market is good for America. I think, from sort of 2022 on is going to be what's good for the domestic industrial base, working middle class is good for America. I think that's the choice that's made. Now there's a lot of meat on that bone to chew still. So let's see how long it goes. It's a highly political thing. It's going to make China hawks very unhappy. But I think it's a realist view. And so it's, as discouraging as I said last week was for me on a number of fronts, I think on net, I'm still very encouraged, simply because of the further reinforcement last week. We heard about the realism around, look, we need to reinvest here and stop trying to play empire. Like that part of our life is over.
Yeah, the realism around the geopolitics. I thought it was really ironic seeing Xi Jinping with a backdrop of this arsenal of crazy weaponry, but talking actually about peace and cooperation and how we all actually need to get along with each other in this more multipolar world that a lot of Americans and investors and analysts are not acknowledging. And sort of, to that point, how do you think this is going to play out when you say if they're going to focus more on sort of like the domestic side, building up an industrial base, but Main Street, it seems like they've just been left out constantly. And as they print more money, it flows into assets, which most people don't have. And I feel like it creates this spiral even further where the average person is disenfranchised, feels left out, doesn't know what to do, and wants to elect, anyone that will just hand them free stuff, kind of, I guess. So, I mean, how is this going to play out? Because it seems like they're trying to do two impossible things. They don't want to upset the boomers and the Goldman Sachs, but they're going to be overthrown eventually by a society that's going to go into revolution.
Yeah, last week, Politico reported that, at a birthday dinner for Shamath, Besant told Pulte he was going to punch him in his effing face.
Oh, yeah, I saw you wrote about that.
Yeah, and I think Besant doesn't strike me as a guy that does that lightly. I think he's under a lot of stress for exactly the reasons you just said, which is they're trying to do two impossible things. Like, in the end, we have reached the moment, where a hard decision has to be made. And historically, over the last 40 years, 60 years, 80 years, time immemorial, governments in trouble domestically, what do? They start a fight externally. They create an enemy that is an other, that is a foreigner. They go to war to stimulate the economy and to take the pressure off themselves. Well, what the last 2-3 weeks, and really what the last 2-3 years in Russia and Ukraine have taught U.S. administrations, this one and the one prior, but that's not an option, right? So the options are crush the bond market and crush the currency and stimulate and invest. Go to war, or let everything collapse in a deflationary spiral, right? And so like they never choose, hey, let's save the bond market and collapse in a deflationary spiral, right? So we knew that wasn't really a choice. It's theoretical choice. So they were left with two choices: print the money, kill the bond market, inflate, grow, and hopefully some of the AI and robotics and stuff can drive enough productivity to offset some of the inflation. Maybe Bitcoin and gold will take away some of the inflation and sterilize it. Stocks will go up, but wages will go up more. We'll see. Or go to war. And what we just learned last 2-3 weeks, war ain't an option.
Right.
War ain't an option, right? Like the U.S. Army U.S. Army War College wrote a study of what was going on in Ukraine in August of 2023. And said that if the West put boots on the ground, they would expect to lose 3,600 casualties a day. A day. America had 50,000 casualties all in 20 years in Afghanistan, is what the report said. And a casualty for the uninitiated is somebody wounded or killed. Can you imagine what would happen to the political stability of this country if they start sending thousands of boys home in a box to defend what? Ukraine? Listen, I have Ukrainian friends, and I don't think it's right that Russia invaded Ukraine. And I've got 3 draft age sons. Would I send my 3 draft age sons there to defend that? It's not my fight. It's not their fight.
Right.
So back to the point, which is war's not an option.
Yep.
So what are you left with? We're going to have to eat the pain ourselves. And I suspect Besson's starting to realize that. I think Trump realizes that. I think there's starting to be stress around that. How do you spin that? Like, they're going to run it hot, inflation, right? And it ties back to the initial point, which is I think that's why gold goes up every day that ends in Y. I think it's why stocks go up on like good news, bad news, all news, no news. I think why Bitcoin is still very, strong, near all-time highs.
Mm-hmm.
I think that's what we're watching is the markets realize like, oh, well, there's always, you go back millennia, there's 2 choices, war or inflate.
Yep. Great points.
War's gone. Yeah.
Before we pivot more to Bitcoin, I just want to touch on one last thing related to China. You are one of the only analysts I see that really tries to educate the public about our rare earth element disadvantage, how much China has leverage in that area and why it's so critical and important. Can you maybe break that down simply for people and why it's important to pay attention to that and how it's influenced the tariff negotiations?
Yeah, I'm just standing on the shoulders of some giants that have helped me with that. I knew of the issue, and I knew it was a big issue. There's a great report. It's publicly available by a defense contractor or consultant called Govini, Govini. You can Google it. I think it came out last year, and it shows the U.S. defense supply chain across different ways they cut it, how dependent it is on China. And has been. And ultimately, one of the big ones is around these rare earths. Why is that? For some reason, our leadership and policymakers have built the greatest military in the world that literally gets 90% plus of, that needs these rare earth, and it's certain ones, and there's certain sort of military grade. It's not like, you can take something out of a refrigerator and stick it into a missile like they were saying the Russians were doing 4 years ago. It is very high market share to China. China's got not just, 50% of the mining or 60% of the mining, but they've got like 70, 80, 90% plus of the refining, depending on it. And it's even higher. Like gallium, China's got like a 98% share we highlighted last week. And
this stuff is in everything.
It's in like 11,000 different applications. And I've been told there's certain ones that are in basically every single missile application of the U.S. military across branches. And guess who basically the sole source supplier of like one of the key magnets is? China.
Yeah.
So that's why I've been on it as hard as I have, which is like it's not about sort of aggregate sizes of things. It's about bottlenecks, right? That's what do I always say? I look for, I read a lot of publicly available information. I'm looking for economic bottlenecks. If your missiles don't work, if your F-35 doesn't work without like this little thing from China, what do you have? You got a lot of expensive paperweights. So to me, I didn't do anything special. I just put myself in China's shoes. I pretended, hey, here's what they're doing to you. What would you do? Like, well, that's easy. Okay, boys, the rare earths, as of tomorrow, you got your last one.
Yeah. We weaponize the dollar. They can weaponize these rare earths, essentially.
Yeah. Yeah. And let's see who runs out first. And to me, it was so crystal clear, especially given the de-dollarization of China's commodity imports and, Russia helping them. It wasn't even a choice. Like we were going to run out first. It's not even close. So it creates enormous leverage. And, there's other factors to it. Like I've been told that China has universities 35 different universities that have rare earth engineering degrees. America has 0. And to understand, like these are not things that you wouldn't, if they came out and said, Luke, they're going to put in a rare earth element refining facility in Lorain, Ohio, which is like 10 miles upwind of me, I would sell my house tomorrow and move. Like this is not stuff you want by yourself. And so I understand why it happened in that way. And like if your job was the national security of the United States, like what were you doing the last 15 years? Because by the way, the Chinese weaponized rare earths against the Japanese in 2010. So this isn't like, oh my gosh, this is such a surprise, right? So think about it. The Chinese weaponized rare earths against Japan in 2010, and the Americans did nothing. Nothing. The United States weaponized the dollar against Iran in 2012, kicked them out of the SWIFT system. And what'd they do? They've built this gigantic Alipay, WeChat, non-dollar payment rail, gold, offshore yuan. Like they have an entire way. Is it fully functional yet? No. Is it as efficient as the dollar system yet? No. But it's like, Yanis Varoufakis 2 months ago called it's a giant 6-lane highway in each direction, ready to go. And then we said, well, hey, we're going to grab Russia's FX reserves. And people are like, all right, well, we'll start using it a bit. So like,
wild.
It's a fascinating contrast in just how we kind of do things, which is like, oh, you just weaponize against our most important ally in the Pacific. How about them Cowboys?
It's so
like,
crazy.
what were you doing? What were you doing? And then we do the opposite. The Chinese, we weaponize our best weapon, the dollar, against the Iranians, and the Chinese build a whole second system in under 10 years. Astonishing to me.
Well, it's clear some people understand this in the administration. We made that public-private partnership with MP, right? We took equity in it. It seems like we are prioritizing this a little bit more, and this is why some of the trade deals have sort of everything gets pushed or delayed or extended. So it makes sense that some people are recognizing that we need to do something about this, right?
Yeah, I think that's right, and I think look, there's a way where this goes that. And I really want to give the administration the benefit of the doubt, because I do think you're seeing these signs, right? The MP, the Nippon Steel deal where we get the golden share. Like we're starting to do a version of industrial policy, and it's kind of how you'd expect it to go. It's unwieldy. We're not China, or we don't have Chinese systems, and we're trying to sort of do some Chinese things while still maintaining some truthfulness or some faithfulness to what we do best. But when I look at things like the Defense Department, who's Feinberg, David Feinberg, who used to run, I believe, Cerberus, as sort of, he's sort of right behind Hegseth. Hegseth's the face of the place, but I think Feinberg is really driving hard to bring and he knows what he's doing. They've been in that world for a while. They know how to do this. So that gives me, that's why I say, I want to give them some benefit of the doubt, because I see some people there working sort of behind the front lines that I think really know what they're doing. And I also want to give them the benefit of the doubt because I think ultimately the way this goes is we're going to get a weekend where it's like, hey, gold's $8,000 now, and now we're going to revalue, one way, and however that happens, and we're going to devalue the debt. We're going to revalue our gold, and it's going to put $3 trillion in the TGA, and basically we're not going to have to issue any bonds, and we're going to use that to fund reshoring or whatever. It's going to be highly stimulative, highly inflationary in the short run, but the right thing to do. And then, if that kind of thing happens, you go, oh, okay. Like they were trying to get a running start, and the Doge thing, I get they had to politically try and failed before it, they did. So I'm trying to give them a benefit of the doubt. But like, if they don't do that sort of debt devaluation thing, like none of this is going to work. The debt's the elephant in the room. You can't do anything that doesn't blow up the bond market.
Yeah.
Because we've waited too long.
Right. I know there's so much at stake. This is so fascinating. So let's talk a little bit about Bitcoin, because a lot of people think that that's where we will end up in terms of a neutral reserve asset, even though we're seeing all the performance really with gold this year. But people do think that Bitcoin should be higher right now. Why do you think it's not?
I don't know. I mean, I think it should be higher. And knowing what I know, I'm still buying Bitcoin. I buy gold and Bitcoin every week at these prices. I don't know.
So why
I'm not
aren't we
buying
at like 150 or 200?
I don't know. Bitcoin's kind of a funny thing. As someone who's been in markets for 30 years, like it does nothing for like forever. Mm-hmm. And then like in 2 weeks, one of my mentors in this business, a great smart guy, brought me along, just amazing, said to me, he always had a lot of phrases. One of the phrases he always said is like 80% of the moves come in 20% of the time. And I just think, there's enough, the thing I hear most about Bitcoin is, oh, it's just a tech stock. Bitcoin's just a tech stock. And in the short run, I could see that, right? Call up a correlation. And, tech stocks act like death. There's some of that they've broken some technical stuff and, whatever. I get it. I don't think it's a tech stock. I think that's going to fail. But until it does, I think, short-term traders are going to continue to trade it like a tech stock. NASDAQ's down 2%, Bitcoin's going to be down 3%. NASDAQ's up 2%, Bitcoin's going to be up 3%. But we're quickly getting to a spot where I think it's going to be seen as, it's not a tech stock, it's a neutral reserve asset. And I think events are going to prove that. So, and I think that'll ultimately be one of the 20% of the times when we get, 80% of the move.
Yeah, there's a great book called Psychology of Money that I love by Morgan Housel, and he talks about that too with stocks, how a lot of the moves happen in a very short amount of time and you see a lot of volatility. But if you stay invested, if you ignore some of the, the temporary crashes, you'll see that it's up and to the right. And Bitcoin has certainly proven that as well. I see you talk about things like electrical infrastructure equities, but you never really comment on Bitcoin treasury companies or recommend that. And I'm kind of curious, like, what do you think of them, and why isn't that maybe something you discuss a little bit more? Do you only focus on spot Bitcoin?
Well, it's two things. Number one, my firm's mandate is I can't recommend individual securities for compliance reasons. That's number one. Number two is I don't have the bandwidth to do it, simply because I don't have the bandwidth to go through earnings reports and financial statements of individual companies, et cetera. And so I don't. And three, for me, I want to be right for the right reason. In other words, right, you can be right for the wrong reason, which is, you own something and because you think something's going to happen, and it doesn't happen, but it goes up anyway, right? That's right for the wrong reason. You can be wrong for the right reason, which is you can think something's going to happen. It happens, but you don't own the right asset, or you express it improperly or suboptimally. And then there's right for the right reason, which is you think something's going to happen and it happens and you make a lot of money. And for me, I prefer to take the risk out of being wrong for the right reason. And I'm not saying that owning Bitcoin treasury companies will or will not be that. I'm simply saying that I don't do enough of the background work where it's just like, I want to not grow a brain. I want to keep it simple. I just, most of my gold exposure is in gold. Most of my Bitcoin exposure is in Bitcoin. I'm a investor in a Bitcoin related private equity fund, but most of my exposure is in Bitcoin. So that's why I don't really talk about them from that standpoint. I think that's really the key.
Got it. Yeah, no, I thought it was interesting because you always talk about, gold and gold miners, Bitcoin, electrical infrastructure equities, kind of these like broad genres, but you never say Bitcoin miners or Bitcoin treasury companies. So I had to ask. All right, one of my final questions, what's your best argument to those who want a cash flowing asset? And that's why they're so against Bitcoin. Because I really hear some of that FUD, especially from TradFi. It's like, well, there's no cash flow.
I could go for another hour on this. I'll give you a couple. It shows anyone who says that is showing their Western financial privilege. If you're earning a yield, you are taking risk, right? Your money in the bank earns a deposit yield because in a capitalist society, you are taking risk. You are, as a depositor, a creditor of that bank. You are getting a yield because you are lending them money. Everyone thinks that that's their money in a bank. It's not their money. It's the bank's money. And so technically, in a capitalist society, money in a bank is a risky asset. You are going to, if the bank fails, you are supposed to lose over $100,000, pre-Great Financial Crisis. And by the way, I knew hedge fund guys, like top hedge fund guys who were moving their money out of banks to get under the $100,000 limit because they weren't sure anything over it would be compensated. Today, that's $250,000. Technically, if you've got $300,000 in a bank and it fails, you should lose everything over $250,000. That is why you are getting paid a yield on that. The yield on a treasury bond is because governments inflate. I can pull up any number of charts to show you that treasury bonds have been a terrible, Warren Buffett in 2012 said that long-term treasury bonds should come with a warning label, long-term bonds, because that's how much inflation was going to have to be. So everyone always says, oh, Luke, Warren Buffett owns all these T-bills. Yeah, Warren Buffett owns all these T-bills. Did you ever see what he said about 2012, about long-term bonds? I'm like, no, what did he say? I said, they're trash. They should come with a warning label. Okay, so yield is risk. If you're getting a yield on something, FTX was paying a yield. I'm sorry to sort of kick some wounds for some Bitcoin people, but, staking on FTX, you were getting a yield. How'd that go? Well, what happened to FTX is what's supposed to happen to the banks. It's just you don't have an FDIC behind you. The other thing I would say around zero yield is, NASDAQ really doesn't pay a yield, does it? But doesn't stop people from owning that. But that's a bit of a different thing. They'll say, well, that's a productive business. They're reinvesting the capital. And that's a fair argument. The other argument is, and why I say it's really another, the Western financial privilege is these people they've never been through a sovereign fiscal crisis, sovereign debt crisis. Like you need to own gold, Bitcoin, something that is going to, because they are, and so it is really, a lot of the people that say that to me are the same types of people, not literally the same people, the same types of people that were like, well, home prices have never fallen nationally. Or, it's a new era in 1999, right? Like a sock puppet on the friggin' Super Bowl. And like, it's a new era. They're going to bankrupt all the old economy companies. Well, they bankrupted some of them, but not really. Not before they all went, So I think it's ultimately about understanding where we are in the long cycle, understanding people look at, the US through dollar goggles, like, oh, we're America. It's never happened here. Well, technically it did. Like the US, the Fed has been running a quasi fiscal deficit, which is an operating loss, for lack of a better word. Basically, right? They're upside down. They're having to print money. The Fed bought a bunch of bonds. Inflation went up. And so they are having to print a bunch of money to pay bank interest on excess reserves to the banks at a low rate, or excuse me, at the new higher rate, while the interest they're receiving from the government on their bond portfolio is very low. That's called a quasi-fiscal deficit. A friend of mine, Jeffrey Fowry, who we're friends, it's funny, we're friends on X. We attended the same investment banking grad school class in Cleveland in 2000. Small world. And yeah, it's crazy. Anyway, he pointed this quasi-fiscal deficit out, and he said, the last American central bank that ran a quasi-fiscal deficit? I said, no. I said, to the Fed? He goes, the Fed has never run one. I said, who was it? He said, the Confederate Central Bank. As they were losing the war. As the Confederate dollar hyperinflated to zero. No, I'm not saying the dollar's going to hyperinflate to zero. But this is what I mean about Western financial privilege. I could go to 100. I wrote a report about it. So my clients would all have some idea what it is. I wrote about it in October of 2022. But if I went to 100 RIAs in America and said, hey, what's a quasi-fiscal deficit? What does it mean when a central bank runs a quasi-fiscal deficit? I would bet you $100,000 that maybe 2 would know.
Agree.
And that's why 98% of RIAs will tell you, well, Bitcoin's still too risky. Gold's still too risky. I had someone at a presentation in the Midwest say to me, all right, like, Luke, I understand what you're saying. This is early 2024. I understand what you're saying about gold. But look, if I buy gold and it goes down 30%, I get fired. If I buy treasuries, long-term treasury, and they go down 30%, I keep my job. By the end of this cycle, those will reverse, right? And so that's why, like, it's still so early for 0% yielding, no yield assets. They don't understand what's happening. That's bottom line. It's a Western financial privilege that, they're going to get an expensive lesson, and that's okay.
Fascinating. And an advantage to us who understand this, right? For those of us kind of early adopters. Well, thank you so much. I'm going to cut that and use that as a segment because I think it'll help a lot of people that are maybe asking the same question. All right. Finally, before we wrap up, what are you most concerned you might be wrong about?
To be honest, I'm most concerned that I'm wrong that the domestic political fiber will hold together as long as I think it will. And I wish I didn't have to say that. I don't say that lightly. Because I feel pretty tight on sort of everything else. Look, if maybe something a little less heavy, if I wake up tomorrow and, there's a, political coup in Russia and or China all at once, and we've replaced them with sort of, the Chinese and Russian version of Boris Yeltsin from 1991, and they proceed to sort of sell their country to the West at pennies on the dollar, then like I'm going to be wrong, and I'll be the first to say it. But failing that happening, and I don't see any sign that that's happening, then it pushes us into this, this dynamic of governments under pressure. And this isn't an indictment of one party or the other. This is governments going back for thousands of years. You can read, and I would recommend everyone does read The Storm Before the Storm by Mike Duncan about late Republic Rome. Because it's like, all you got to do is scratch out the names and add the ones in. It's like reading the last 15 years in the U.S. And war's not an option now. It's either nuclear war, which is, whatever, it's sort of like, when COVID was like, oh, COVID's going to kill us all. It's like, well, if COVID's going to kill us all, what's the friggin', buy stocks, because like we're all going to die. And if it doesn't, like stocks have gotten killed, so buy stocks. Same kind of thing. Like if we can't go to conventional war without losing, then either we're going to lose. I don't think we're going to go to conventional war, or we're going to go to nuclear war, in which case everybody loses. There are no winners. It's uninvestable. Or we're basically going to sort of go through this really bumpy time where we're going to do our best to reinvest and reshore. And the inflation is going to be really high, and the AI and robotics disruption is going to be really weird. And so I just think we're in this really, we've been hearing about the fourth turning for 20, 25 years now. And we've all kind of known that, like, sort of around 2025, we were going to enter this period where, 2025, 2032 is going to be really hairy. Like, I think we're there. I think we're there. And I have no idea what it's going to look like. And if anyone tells you they know what it's going to look like run the other way. They don't have any idea. And I don't either. And so for me, it's I think one of the wisest things I've read in the last, certainly in the last week or two, was from a friend of mine who is, he said, look, what I can't tell is, like, if we're shifting from a high trust society to a low trust society. He said, look, this country pulled itself back together in the 60s. We had political assassinations and the country pulled itself back together. But we came into the 60s in a very, very high trust society, right? Camelot and everything. He said, if you go to the 20s in Germany and Weimar, there were political assassinations of moderates, and they were in a low trust society. They had just lost a war. They had, their institutions had sort of been rug pulled around, the country. And they sort of devolved into madness. And he said, I think there's something to be said about a shift from if we're in a low trust society in these events versus in a high trust society with these types of things in a fourth turning. And what he said to me was, I think we might be moving to a secular low trust society. And I sadly agree with him. I look around the last 10, 15, 20 years, like industrial workers, rug pulled, middle class, rug pulled, fraud, bailed out, rug pulled, the financial system, rug pulled, going to war on a lie, rug pulled. The last 5 years, healthcare. There have been surveys, Kaiser Foundation, like 60% of Americans don't trust their doctor, don't trust the mainstream healthcare system. And I understand why. And that, to me, when I put all that together into the macro, the financial, et cetera, that's the part that scares me. Where could I be wrong? Like, look, all of a sudden people waking up and go, oh my God, we got to get our capital out of America. That's the one thing that would make stocks go down. And that I'm going to be dead wrong in that case. Now, I'm not going to be wrong on gold or Bitcoin. I'm not going to be wrong on the dollar, but I'm going to be dead wrong on stocks. And that's okay, because I'm trusting the gold and Bitcoin would be, more than offset it, which I think it amply would. But that's the part, to me, and I hate to ramble on this question, but I think it's such an important question. But like, that to me is like, we are in very, very dangerous ground. And I got a lot of people who I really, really respect and who are very, very sober, staid analysts, military officers, investors, all saying the same thing. And I've been doing this 30 years. I've never seen that before. And it's, it troubles me.
I think a lot of people share your concerns. I certainly do. I've never seen people become so divided. And I think that there are very few things that do offer real hope, especially to the average person. It's interesting that you bring up a world where trust has broken down, because it seems like that's precisely what Satoshi was trying to address in creating a trustless system. Because as this continues and plays out, and we know they're going to destroy the currency, right? I pray that we don't have leaders that take us into war, because I saw in your newsletter, where I hope everyone gets your newsletter, there's a page where it's like, it shows you essentially the range of some of these nuclear weapons and how easily it could cause an immense amount of damage if we took it that far and pushed some of those buttons. And that's the worst case scenario for everyone, right? And I hope we stay far, far, far away from it. But a lot is at stake. And I hope our leaders make the right choices. And I hope people come together as opposed to pulling apart and turning to violence. So, well, Luke, thank you so much as always. You're absolutely brilliant. I'm so grateful that we have an analyst like you in the space and someone who's an advocate for Bitcoin. Any final thoughts?
Yeah, I'm ultimately, I'm ultimately optimistic.
Me too.
By what I've seen over the last 2 weeks, right? Like, I think we're moving to peace. I don't think that's understood yet. I think 2 weeks ago was the biggest geopolitical week since the fall of the Berlin Wall in 1989. That doesn't mean it's all, the problem is like sort of, we're we're on the wrong side of the Berlin Wall, right? We're on the side that's going to go through some tumult and reinvestment and inflation and disruption by virtue of the choices we made over the last 25 years. But ultimately, look, if you were in East Germany in 1988, pretty happy about how it worked out over the next 25 years for you, right? And I think that's where, sort of the bottom 90%, 95% of Americans, is probably going to be bumpy, but I think they're going to be really happy where they end up. And like I said, I think 2 weeks ago was like the fall of the Berlin Wall. So bumpiness, but ultimately optimism.
Well, we'll be looking for more of your forecasts and outlooks. Thank you so much, Luke. Everyone subscribe to FFTT, and we'll see if your prediction of a 25 basis point cut is right. Maybe they'll surprise us with 50 basis points. Thanks so much, Luke.
Absolutely. Thanks for having me back on, Natalie.
Thank you so much for checking out this episode of Coin Stories. Make sure you're subscribed to the show so you don't miss any new episodes. And if you can, turn on those notifications and leave us a positive review. They really help the show grow organically with new listeners. We have a free weekly newsletter. You can sign up at thenewsblock.substack.com. This show is for educational and entertainment purposes only. Nothing should constitute as official investment advice, and you should always do your own research. I'm always open to feedback and guest suggestions, so please feel free to reach out at info@talkingbitcoin.com. I'll see you next time.